Alrighty, guys, it's time to wrap it up for today. It is 3:30. It is Tuesday, February 4th. And it kind of news this morning was to the weak side. They had a little bit of and the reaction was actually on the positive side. If you look at how the reaction came in at 10 o'clock news. But so we had a nice little morning rally going on. It kind of stalled at resistance. So far, the 50s and 60s are holding. And we've pretty much been holding on there since the London close. We had a little bit of rotation down after that London close, and then since then we've pretty much gone sideways. Had a nice little attempt to take it higher. Sloppy move to the upside. I did take one more trade since this morning. I took that when I kind of missed this initial thing, but once you see it start running up like that hard, I would have wanted to take it when it broke that the 58, but I kind of was too late on that one. I missed it. So I was watching it at the mode, and that's always going to be a potential spot where it holds. So you can see how you have an area of resistance there. But with this kind of move, I felt pretty comfortable taking a long trade. Had my stop down here just in case I was flat out wrong on it. But they went higher, and I was sitting through a bunch of gyrations here, and it finally looks like they were heading higher. First, I had an exit up here at the 67s, but after that rotation down here, and I managed to survive it, I figured that well, maybe you have a shot for them to extend. So I stayed in that trade, and I ended up just getting shaken out. And then right at M period, you saw what happened there. That was like the flat out shakeout move. So that trade gave me like $10. So I'm up $18 now on two contracts on the ES, but I was up a good $40-50 on this one when I was trading at the upper edge. Now I could have taken the profit there. That is a spot where you can do it. I just made a calculated move after that the rotation down here that they had a shot at retesting, maybe even take it higher, especially with this kind of a grind we had going up here. So yeah, it didn't turn out to be true. So there you go. Sometimes you just take the profit you got, That's always the trade-off. Take what you got or try to sit through it for a little bit longer. But so two trades on the ES so far up $18 on that. And I would start off the ES from the long side of the market. Looking at the capital flow, we are up here against the big area of resistance. We are up above it. That is a 40-45s. We're taking that out. We're trading above it, and at this point, I mean, kind of comfortable that we may have a shot at trading back up in this upper range here, but we're kind of just barely there. So if they can hold above the 45s going into the overnight, I'm going to start from the long side. If they trade below that three little edge at the 40-45s, I'm going to go back range bound. So that's kind of the dynamic I'm looking at. So looking at this on the long side of the market, let's see if they can hold on to this. We had a bunch of news this morning, or in the overnight, not news, but the earnings, especially the Palantir stock, that absolutely popped the market in a big way, at least the NASDAQ. But ES, nice P formation, holding right above that 40-45 area, stand alongside, look to buy weakness at this point. Looking to buy against the 48-50s and that three little edge at the 40s. So that I may split this edge going into tomorrow. We'll see how the overnight looks. But looking to buy weakness down to that 40-45 level going into the overnight. Below that, take off the long bias. There may still be buying opportunities on the way down, just a little bit less aggressive. And the bias is back range bound when we get there. All right, so that's the ES. Let's see how that's going to go in the overnight. News for tomorrow before I keep going. We have let me see here. ADP report at 8:15 tomorrow. Mortgage apps at 7, ADP at 8:15. Then at 8:30 with international trade and a treasury refunding statement. PMI composite 9:45. ISM services at 10. Oil report at 10:30. So we have news spread out for all day tomorrow, but it's not I don't think anything which is going to drastically move the market. We do have a few Fed speakers as well sprinkled into this, so it could be a volatile day tomorrow as well. But the big news, I think, is going to come on Friday. That's the employment situation. Looking at the NASDAQ and the NASDAQ and the bonds. So bond market back on the upside. Looking at the capital flow on the bonds, and we are looking at a pretty range-bound market, I would say. Let me fold that together overnight, fold that back in. And we're looking at a market which is back up against this upper edge. I'm just waiting for them to blow through this 115 edge. The next attractor is going to be right up here at the 116. Could be a beautiful long trade if that comes out. We had one probe here yesterday when the Mexico tariff thing was signed. But since then, overnight, right there testing the lower edge, they're back to the midpoint. Now they're up here testing these upper edges. So I'm still looking as a range band market, though I would start the overnight looking for early strength. I'm going to get short against the 26s and the 115s for rotations back down. And if they take out the 115s, I'm on the long side of this, looking for a run up here to the 116. So that's the way I'm looking at the bonds going into the overnight. All right. NASDAQ, I did take one more trade on the NASDAQ. That was at that little sell-off. Remember what they had going? I had a few trades on that, 3 trades on the NASDAQ, right? So let me make this a little bit bigger so you can see what I'm talking about. So the first trade was at the high here when it looks like they were finally going to take out the high and start trading higher. That was just a break-even trade. They shook me out of that trade pretty quick, and then the whole thing ran higher. So that was one of these things. You got a little bit lucky on that one, but they looked to me like they were at least in a spot where they could take it higher, especially looking at the action up to that point. You can see how they had been grinding, support had been holding all the way up here, higher lows all the way up, and then finally starts heading higher. Not great trade location, but worth the shot, and they just got shaken out. So I was shaken out of that one. This guy here I scratched because it just didn't go anywhere. It just didn't go anywhere, and when it doesn't go the where you expect it to go, then you just get out of the trade instead of sitting in it. If I sat in that trade, would have been a big fat loser, as you can tell. However, when it ran lower, when it ran it hard down here to that support area, and the first one you don't want to get on, second leg lower, yeah, now you're getting close to that midpoint, and when it starts stalling, you can watch the action when it starts stalling like that, starts grinding this to the upside, and it went down a bit, and then started trading higher. I hopped on a long trade there and rolled it up for a nice $50 additional or $60 trade on that one. So I'm up $60 on the ES on 3 round turns on that one. And then, of course, sloppy moves back and forth. I have not re-engaged the NASDAQ since. They're too freaking volatile, absolutely volatile. So you had to be really cautious. I was watching this area right here after that rotation down. Looked to me like one of these, sometimes you have a good shot here for them to break out, but you're up against a tablet pivot and you want to just be cautious about how you play that one. And so I just waited for that thing, and you can see how that just absolutely failed on it. And now they're finally running it up. So a lot of algos running this back and forth. So I'm still thinking the long side of the market, though, these little rundowns and these little algo trades absolutely makes it difficult to stick with a trade. So that's that guy. And then, of course, so I'm starting from the long side on the NASDAQ too. Watch the NASDAQ when it comes to the 21,800s. So when you get up to this area right there, the 21,800s, that's the spot they need to take out. So we got a little bit of room to work with here. And I would be looking at getting short against 700, 745, and 800s for rotations back down. And the whole point of that is really that you're heading up towards this low volume area in the 800s. So that low volume area is going to stall activity. We know that. And getting short somewhere on the way up here could certainly be a nice move for a rotation right back here to that 21,500s. So we'll see if that's going to hold up or not. But I would start looking for early strength for a spot to get short and for a move right back down again. That's kind of what I'm looking for on the NASDAQ. Now, if they blow through the 800s, you don't have to have your stop you can have a pretty tight stop if you're up against that level. You don't have to make that trade very big. And there could be long trades between these areas. So the key thing, don't buy into an area of resistance. That's the only thing you want to be careful of. When it takes out an area, then you can start looking for a potential long trade to run up to the next level. And that's usually the biggest mistake you make. So anyway, look for early strength on the NASDAQ to get short, buy weakness and down to the support area. Let me show that again. The support area at the 550s. I'm going to adjust these edges for tomorrow. If they close below that 550 edge, 532.50, this area of support, I'm going to adjust these edges. Go back range bound. But if they close above it, I would start looking for early strength and see how far they can take it on the upside. They're looking for shorts against these upper areas of resistance. Remember, the default trade we do is failure to take out resistance or support. That's the bread and butter retest failure type of trade. Happens more than often. Finally, gold. That was a debacle this morning. I got in on that one, and I managed to on 5 trades lose $125, and I was like 4 losers. I was absolutely on the wrong side of that. That's kind of sad. The first trade got me kind of a little bit tweaked because I got long against that tablet, and then had to watch it run all the way down and low tick me. The freaking guys low ticked me just to start that run to the upside. That was very frustrating. And then when you see this, take out the tablet like this, like that, usually you have a retracement trade, pretty violent one, exactly like you have here, but they sets up a short trade. So I tried that, but this stop was a lot tighter. I wasn't going to make that a big trade at all if it didn't work, and it didn't work. So I was out of that thing. Then I tried a couple of more trades. And the only shitty trade location I had was that first trade. I caught myself hopping on that on the way down, and it just stalled right in my face and then ran right against me. Tried one more with a better trade location. It didn't work either. And then I got one here, which I got shaken out of. I tried a long trade on the way up here, and it knocked me out. So that wasn't too pretty, but that's kind of how it goes. Oil gold has been super volatile. I keep warning you guys about it, and I stepped in it right myself as well. So that's not a pretty picture, but we'll leave that behind us. So gold, trade that from the long side of the market. We were looking at trading it. We were looking for rotations back to that attractor area 2850. And so far, gold has just taken out the highs and is on its way higher. So I would say that this high volume area right now has been taken out. If the trade below that's 2860, 61s, that's when you need to go back looking for a rotation back to the 50s. But at this point, I would stay on the long side on gold. It looks like me like they're trying to take this higher. So I look to buy a weakness on gold. Watch that 60, 62 area. If they trade below it, head back, take off the long bias and go back more range bound. Look for rotation back to the 2850s. And then finally, oil. This one is a weird one. It's like, go figure, right? So oil is it could have something to do with China tariffs. Could have something to do with Trump signing a memorandum vowing to kill off their oil supply. But they had this massive run to the upside after they ran it down to the 70s. Oh, right up here. Some big move. I think that's probably because pricing and maybe Iranian oil coming off the market. But that was way up here, now right back here to the 72s again, so right back to that attractor. But they were on their way down right to that attractor point at the 70s and then bounce off it. Now, you can also argue the case. I don't think that's necessarily true in this case, but when you get to a high volume area, the very first time you get there, you usually get a bounce. At this point, I think that bounce was more related to news than it was actually that high volume area. But it looks pretty cool, doesn't it? It went down and then bounced like that. But I think it was more related to the news about the oil supply. But look at this thing. I mean, that is the way oil traded here earlier on. This move right there, that tells you something is happening right there. And most likely that had to do with Iranian oil coming to zero. Well, basically, again, it's choked off and the market repricing that immediately. So that's what I think that would be. But that's something but everything structurally is talking about lower prices. This whole thing is like, yeah, you have these little blips, and those are the cross currents you need to watch for. And a day like this, if you don't have a stop in there and you don't mess with your stop, you would be literally out of you blow up your account. So that's why you stick with your stop. You can adjust it once to a better level if it gets placed a little bit off. If it's in an area of attraction, you don't adjust it a little bit, but then don't touch it after that. So anyway, word of wisdom, right? We all done that mistake. Anyway, so far 5 round turns on gold. That was a debacle. And then I had a couple of round turns on the ES, up 18 on that one, a couple of three trades on the NASDAQ, up 60 there. So at least I kept my losses below 100. That's kind of my target for today. If I had stopped trading in gold when I realized I was on the wrong side of it, I would have probably been in a good spot right now. But that's how it goes. So we'll wrap it there for now, guys. And I'll see you back bright and early in the morning, and we'll go at this again. All right, guys. Have a good evening. Later.